There's things that are showing that Apple needs to its business model needs to go forward as well, instead of just being dependent on iPhone upgrades, which they will get anyway, Stephen.
And in China even, yes.
Yeah, in China.
Sure, China looked just like iPhones in that.
We've never asked you, I mean, is what we're doing with China worth the angst and the market share losses that or market cap losses we're seeing? Is it worth it?
We're going to the sort of the larger trade war. The fact that, for example, we announced a trade deal with the European Union in June. We took very, very large hits to European auto shares, all sorts of companies that are trade sensitive there. We never recovered any of them. So we seem to be able to get into this, and we seem to have some agreements to agree, but we don't get any of the relief from this yet. So I think it's going to be very, very interesting if this year we can actually have trade deals that can pull back tariffs and create some sort of relief or not. But we're fragile. We're fragile on policy. I think we were just saying, we have Chairman Powell tomorrow, and we really need to find out whether they really intend for financial conditions to be tightening like this, that we want outflows from the Fed's balance sheet of $50 billion per month all through the year, tightening every single month, right? That's probably half as large as the rate hikes in terms of the impact, and this is what we intend right now. So I think we need to.
Do you have a calculation for how many rate hikes the balance sheet unwind? I've seen someone say it's already 6 quarter-point hikes just from the
you might see.
You think that's a real number? That'd be 9 plus 6. That'd be 15 hikes then.
The Federal Reserve's own modeling suggests some of it that the impact is sort of half as large as the rate hikes. And how seriously we can take all of that when this is untested is quite unsure. Certain level of rate hikes at some point will have a larger impact than the one before. It's not going to be linear. But we can't just say, well, Treasury yields are falling, LIBOR is up at 280, private financial conditions are tightening, equities are down, and this is all going according to plan. So we need to hear something forward-looking.
Right. We saw this, and we saw this in 2015 into 2016. So that line about history repeating itself, the first time is tragedy, the second time is farce, I think it applies here. Ultimately, what we had in early 16 was a Fed that backed off, a dollar that stabilized, oil prices went up, and the bull cycle continued. If we get too tight here with the Fed and we continue down this trade path, we do have to worry about the strength of the economy. The good news is the starting point is quite good, and we're a ways away from a recession in the United States, but we do need to be careful here.
Absolutely.
This doesn't feel like comedy or farce. Or it feels a little rougher.
What would an overshoot, Santoli, look like in Apple? Because we just saw 144.5. What would an overshoot look like?
I mean, I think, look, you're going back to about a year and a half in price right now. So
could it go to $500 billion? I guess anything.
I don't know.
I
think it's more like 120. So like if it were down another,
that would be $500 billion. Because we're at 690 now, I think. Well,
yeah. So not quite, about 15% down.
15 from here.
I don't know. I mean that.
You're getting down in the 5s then, 5 and change, right?
Yeah, I guess so.
It's just, you remember all the other ones that were 600 ones 25 years ago.
Yeah, I mean, look,
never got back.
You want to talk about an overshoot? To me, that would be.
That was an overshoot on the
pretty
upside.
Extreme overshoot.
Well, what was the overshoot? 1.1 trillion or the 550? That's half.
Yeah.